everything's the same. The flight goes smoothly, the landing goes great, there aren't any problems. But is that really going to help that pilot if, God forbid, something happens? His instruments aren't working right. His landing gear doesn't come down correctly. His ailerons aren't functioning correctly. The tail fins aren't working correctly. He's losing massive amounts of fuel. Okay? All of those things are not the normal. But still, he trains for the possibility. And it's so he will have confidence in that situation. Now, I'm not saying that, you need to paper trade for the rest of your life, but I am saying that there is some benefit in it. And there is some benefit in going through exercises in the marketplace. Because you're going to gain some of the experience. And even if you've been in the market for a while, those types of exercises will absolutely help. So, again, I think the reason why rookie traders are not willing to, say for example, the guy goes short, he's seen the market come lower, the market's popped back up, the rookie trader, they're probably going to stay in. And they're probably going to stay in because they're just not confident that the market is going to let them back in and make some money. And let's go ahead and step through this. This is one of the exercises that will help you to develop confidence, but it will also show you how you can see the market unfold and even get you out of trouble from taking a huge loss. So let's go ahead and step through this. So the market comes back up here and it forms a double top. Now again, if the rookie trader is still in, what's he thinking? Oh, well, look at this. We've got a double top. The market's probably going to come back down. It came back down once already. Okay, maybe, maybe not. Let's see. Well, now look at what's happening here. Okay, we've got support holding. We've got a double top. But more than that, we also have the beginnings of a bullish, what I call a bullish wedge. One of my early trading partners, he didn't like ascending triangle. He said he thought that sounded way too stuffy, so he liked bullish wedge. I like it too, so I swiped it from him. So we've got a bullish wedge forming, and like the name implies, it implies that the market's likely direction is up. Why? Well, because look, the bulls are buying at higher and higher prices, but the bears are being forced to sell at higher and higher prices too, aren't they? Well, now look at this. The bears had a chance to keep selling down here, didn't they? But they didn't. They didn't sell at lower prices. So what does this mean? Well, you know what? It means the likely direction is up. A few more bars. What happens? The market has another opportunity to break through support, and what happens? It can't even get to the line. It finally makes a spike down, but look at that. It can't even break. So what do we have to say is going on here? Well, this is now developing into more of a pennant, more of what would be called an asymmetrical triangle, but it's forming into more of a triangle shape, right? But still, we're looking at the likely direction is up. Okay, so all the signs are there. Remember, I've gone on for 20 minutes here. The whole point of this is you've got to be open and ready and willing to think about what happens if I'm wrong. What will the market look like if I'm wrong? If resistance is not going to hold here, what's probably going to happen? Well, you'll probably start to see support come above the line, right? You'll see that the market just won't break through the resistance level. That probably means that prices are going to go higher. That's what that probably means. Well, look what happens. Support does what? It comes up, up, up. Now it's above the line. Now, an easier way of saying that is you're going to see a bullish wedge. That's what that means. Then the likely direction is up. Okay? That's what that means. And of course, we all know the punchline. Boom, the market breaks up. I mean, this really was a very big move.